Bree, welcome to Women Investor Wednesdays.
Hi, Beth. Thanks for having me. I'm so excited to be here.
I am so excited that you're here. I love when young women are investors in real estate and I can bring them on the show because so many times I'll meet young women and they'll say, no, I can't invest. I don't have the money. I'm too young. And I'm like, so the more young women like you I can get on this show, the better for all of us, because that will help the next generation. But before I get there, and before we get into your story, your very exciting story, I need to just tell the audience why we're here. Can I get a couple of minutes to do that? Do you mind?
Of course, take it away.
Okay, awesome. So back during COVID, I had heard a stat that only of all of the commercial real estate investors, only 3% were women. And of the 3%, half were inherited and half were women signing on their husband's guarantee. And I'm like, that is awful. I have got to change that. And so I started interviewing my friends. I didn't really believe that. And so I started interviewing my friends. By the way, I've been doing retail real estate, so shopping centers, for 39 years. So I'm surrounded by women in my industry and field. So I'd start talking to them. Do you invest? Yeah. Well, where do you invest? The stock market. Okay, but don't you invest in commercial real estate? Like, you do this every day. It's like free insider trading. Oh, no. Why don't you do that? Well, I don't have $1 million. Okay, you don't need $1 million. Nope. Well, it's too complicated. You do this every day in your field. Like, you rep Starbucks, you find a site for Starbucks, and then you hand the deal to a guy, and then you don't even ask to roll your fee in. So I was just going crazy. The more people I talked to, the more I realized that that stat of 3% was accurate. So I kept digging, and kept getting rid of their excuses. And then finally, the common theme was, I don't know any other women doing it but you. And I'm like, oh, okay, that's a problem I can solve, because I know there's other women out there doing it. So I did a virtual summit. This is during COVID. So I invited 8 women that I knew all around the country that invested in all different asset classes: fix and flip, self-storage, hospitality, retail. And we had about 90 women join the call to listen to these women. And then since then, we've had a conference, a live conference down here in South Florida. We've had, this year was our 5th year. We usually have about 250 women in the room. And now the women in the conference are starting to invest with each other, which is amazing. But I realized, because I keep that so small because of the intimacy, I can see the progress we're all making, because people are returning and they trust them and they invested with them, and it's great. But I realized I'm not going to get, my goal originally was 3 to 10%, but then last year the theme of the conference was think bigger. So now I'm going to do 30%, 3 to 30%. And I know the conference isn't going to get us there. So that's why I started Women Investor Wednesdays. And we've had about over 80 women that I've interviewed live. And this is why you're here, to tell your story. And I'm so excited.
Thank you. Yes. And you know, the funny thing is I think I also read somewhere too that when women get into real estate, we make better landlords and we make better investors. So come on, ladies, let's go.
Exactly. All right. So my favorite part, let's go back. So I'll just, get to the end. She and her partners have over 160 units, but we're going to step back. And can you remember what you were doing and how you got into it, like unit number 1? Let's just go back, and we've got 45 minutes. So we've got plenty of time to share all the ups and downs and the stories, and something new you're doing, which I'm very excited to talk about also. So stay till the end, everyone, because there's another income stream we're going to talk about also. But unit 1, how did it come about?
Yes. So unit 1 was accident. I was an accidental real estate investor. I was a professor in public health in Pennsylvania and had recently had a job opportunity in California. And so when I first became a professor, like everyone does when they finish grad school, it's like, oh my God, I'm making so much money at a salary of like $65,000 a year. And I went and I bought a house. And a year later, I got the job opportunity in the Bay Area in tech. And I was like, well, I don't really want to sell my house, so I'll just rent it out. I accidentally hit the 2% rule, which is my rents equaled 2% of the mortgage, the value of my house. And I was like, oh, okay, well, this is really easy. So I moved to California and I decided to buy a duplex. So I always kind of say, really, my second deal is really my first one, because my first one was just a single family. I had lived in it, I had fixed everything. It was way too easy. No one has that easy of like a first deal. So my second deal is really my first one.
Okay, so you went to California, you said, oh, I've done this. I rented. So did you buy the duplex to live in one and rent out the other half?
No. So I decided to do out-of-state real estate investing and continue to invest in Pennsylvania while I was living in the Bay Area.
Gotcha. Okay, so you live in the Bay Area and you bought the duplex back in Philly or Pennsylvania.
Yes, correct. It was Allentown, so like the Lehigh Valley area. Yes, and bigger pockets and David Green, they just make it seem really easy. You're just living in one state and just go and acquire a property, just buy it and manage the contractors from a distance. So it took me a year to get out of that property. I'll back up a little bit.
How old were you at this point?
I was, let's see, it was like 2017. So I was like 28-ish at the time.
So how did you find, that's amazing. How did you find the duplex? Were you going on like MLSs? Like, how did you find it?
Yeah. So I had built a relationship with a realtor. When I rented my single family, I had a realtor who was helping me with property management. And I said, I'm going to give myself 6 months to learn as much as I can. So I listened to all the podcasts, read all of the books, and then I want you to start sending me deals. And so he sent me this duplex deal. And I was like, yeah, this looks great. Sure. I think that one was probably, it was a while ago. It was under 100. So it was somewhere between like 80 and 100K.
Okay.
And that was quite an experience. So I also decided to partner with my parents on this one as well. My poor parents.
Was it the bank of your parents that got the mortgage, or did you guys get a mortgage too?
We got it together. So we were equity partners on it. And I just essentially was interviewing contractors. By that time, I had actually fired my property manager. So I was looking for different property management. The rehab was a full down to the studs renovation. So it was like surprise after surprise after surprise. But I was very confident that this is what I needed to do. There was just something inside of me that was like, you know what? I'm learning all these lessons. It's not going to be the end of the world. I'm following, everything that I'm learning in the books. So I think it's going to be okay. And through that experience, I had wind up firing another 2 property managers and 3 contractors.
Okay. So you buy it for 80 to 100. You and your parents are partners. You didn't get a mortgage.
We did. Yes. We signed on the mortgage together. Mm-hmm.
So how much was the mortgage?
So it was, a purchase price was like 80 to 100, somewhere in there. I know it wasn't much. So the mortgage was probably like 50 to 75.
So you guys get a mortgage, and then you and your parents are going to fund the
renovation. Yep.
But you're still having to pay the mortgage without tenants.
Yes, exactly. And I, for some reason, in all of the reading that I did, missed that important piece to the BRRRR, where actually you want to buy with hard money and buy something under market value and also get those renovation funds. That just didn't click to me when I was reading all of the information. So we got a normal mortgage, and then I used my own cash and a little bit of theirs to fund the renovation.
You remember how much the renovation was?
It was about 100, about 50 per unit. Yep.
Okay. So tell everyone, because some people that watch this are new and they don't know what the BRRRR method is. So tell them what that is.
Yes. So that's when you buy a property, you renovate it, you're going to rent it out, and then you're going to refinance on it, and then pull as much cash out as you possibly can. A lot of the information on BRRRRs make it sound very easy that you're going to just pull all the cash back out plus some. That's really difficult to do. So we, on my team now, we like to refer to the BRRRRs as far as like a base hit or a home run. And so as long as we're leaving less than like 20% of, you know, the ARV in, we're okay. But it is a strategy so that you can grow a lot more, you know, faster in real estate.
Right. So you, so it took you over a year to renovate.
Yes.
So not only are you paying the mortgage out of your pocket, you're paying for the improvements out of your pocket because you're not getting any rent.
Mm-hmm.
So at the end of the year, yay, we're done. Were you able to lease it fast, the 2 units?
Yes, very quickly. It was in a desirable area of Allentown. So renting there was not a problem. Their vacancy rate was very low. The rent to purchase price ratio was very good there at the time. Now it shifted, and actually I no longer have a portfolio in Allentown. We sold everything there last year. And that was a little bit of luck, and also a little bit of like, this is the market I used to live in, so I know it. And
right. Market knowledge, very important, right?
Yes. Yes.
Okay, so when you sold it, was it a successful investment?
Yes, it was. And we had actually refinanced out of it, and we were able to pull out at least the majority of the renovation funds. So
Great.
yeah, it was solid. It wasn't, you know, the home run dream BRRRR, but for really like my first deal, it was very solid.
It was your master's degree, right?
Correct.
You probably learned 51 lessons, right?
Yes, and cheaper than going to university.
Right. All right. So how did you go from 2 to 20? Because that was the next step. So were you still in California and you grew the portfolio?
Yes, exactly. So at that time, I had this mentality where when it comes to real estate, don't think small, think big. Always have that, you know, in your mind's eye, like, don't be a landlord of one. You want to think about the cost of replacing a roof, replacing a water heater, replacing an HVAC system. And to cover those costs, you really need to scale. Because if you're a landlord of one house and your roof goes, there's your cash flow for the next 10 years, right? So I had it in my eye, like, I'm not doing small time real estate. I'm going to go steady, and I'm going to build a substantial portfolio. So I had found another realtor through Bigger Pockets, and he was a realtor of mine for a few other properties that I decided to purchase in Allentown. And so then at that time, I was really buying 2 to 3 properties a year, mostly like duplexes and triplexes, all within the Allentown area.
And you were funding these from your W-2?
Yes. Yep. So I was funding those from my W-2. I was not raising capital at the time. I didn't really learn about hard money until I would say I actually started partnering with my family, with my sister and brother-in-law. So it was really traditional mortgages, fund the renovations through my own savings, and then refinance out of them and pull the cash back out.
Amazing. Early 30s, building a portfolio up to 20, all by yourself.
Yes.
I mean, at one point, did you go to a bank to get the mortgage for the next deal and they said, sorry, Brea, you have too many mortgages?
No. So so when people tell me I don't have enough time to do this, I really like to challenge them on that, because I had 2 W-2s. So I was working 2. I was working in tech, and I continued to have a foot in academia. I still actually teach online classes for a university. I also had a statistic consulting company. So I was working on some research and running analyses and picking up some extra cash there. So when it came to on paper, I was a perfect candidate, because it's like, whoa, yeah, you have 2 W-2s. So, and I hadn't hit that like 10 mortgage threshold where it's in your personal name. So
Right.
I was okay. Yeah.
Amazing. Okay. So how old were you when you hit the 20 and you said, I've got to do something different? Let me back up. I have another question. So you're a big thinker. Who in your mom or your dad, like, where did you get that big thinking mentality?
You know, I would say both, and it's in different ways. So I have learned over the years that my dad is quite a big thinker, but he's quiet. So he doesn't express it. And my mom, so her background is actually teaching gifted kids. So she's all about critical thinking and analysis and talking things through. And so I think I got a little bit of both, where it's like, okay, yep, let's look at the bigger picture. And then how do we process this? How do we become more solution focused instead of like, oh, this is a problem, I guess I'm out.
Amazing. Okay. So how old were you when you had the 20 and you said, I need to do this another way? And then we'll talk about bringing in your sister and your brother-in-law. How old were you?
Yeah, so that was around 2019, right before COVID hit. So my math is bad. I
So
was,
you're like 30.
Yeah, I'm like 30s, in my young
30,
30s at the
30,
time.
31. Yep. And you're like, okay, I want to do more. I can't do it by myself. Were you still living in California?
I was. Yep. I was still in
doing
California.
the 2 jobs. And okay, so walk us through that. Like, when did that aha moment come and say, I want to do more, but I can't?
Yes. So the aha moment was when I realized all of the tasks that I was juggling, everything from like bookkeeper to project manager to, the underwriter to the deal finder. And I was like, wow, this is not sustainable. I'm working during the day, doing my other jobs, and then this is filling in every ounce of free time that I had. And at this point, I had been talking about real estate nonstop for the past 3 years with my sister and brother-in-law. And, they were like, no, that's not for us. That's not for us. Well, you say something enough over and over and over again, and eventually it starts to sink in. So it only took about 3 years for them. And I'm not even sure how the conversation came to be, but at some point we had the conversation where it's like, I can't continue to do this. I would love for you guys to buy in on some of the properties with me. We can free up a little bit of cash and then we can start to acquire properties together. And so my brother-in-law joined the team first. And then my sister wasn't quite on board, but him and I became in cahoots because we were like, we really need her. She's the integrator. And it was like, we really need her if we want to take this to the next level. So then she joined the team.
And what was he doing when he joined?
Yeah, so he took on the role of more.
No, what was he doing? Did he have a W-2 and you said quit that and come over? Or
no.
W-2? Or, yeah.
Well, I actually have an interesting perspective on W-2s, to hang on to those as long as you can. So he's still in his W-2.
Wow. Okay.
Yep. He is still in his W-2. And so it was really like, during your free time, if you could help manage contractors and help with scopes of work and things like that, that would be great. And so that's what he would help, a few hours a week on while he was doing his W-2.
Did you want him to help with contractors because as a woman that was an issue, or he just had, I can see how dark I am on the screen, so I'm going to move to where there's better light. So audience and Brea, we'll just keep talking and I'm going to walk. Okay.
Yes. So Logan actually has a background in plumbing. He did some plumbing when he was younger. So that's helpful, right? To have that different kind of eye and then way of talking to plumbers about things. And yes, depending on the contractor, presenting as female can be problematic. And I'm going to use whatever tools that I have in order to get the job done. So I'm not going to be the type of person that's going to like, let me butt heads. It's like, hey, why don't you talk to Logan? He's from the Midwest. And they, just hit it off. And guess what? Smooth as butter. So,
Awesome.
it just doesn't make sense where it's like, the contractors, they don't like women. I don't want to enter with that kind of energy. But sometimes it's just, let me just throw you another team member. Great.
Trust me, I have a partner who I invest with, and sometimes she has to bring her husband to the meeting with the seller because she's going to get the deal faster. And
Yep.
Whatever, let's put our egos in our pockets, because if we want to invest, and sometimes we have to listen to the people on the other side and what's important for them, or what will help us get to the next step is what we need to do.
Exactly.
So your brother's name is Logan, and he married a woman by the name of Boston.
Yes. So he's my brother-in-law. Boston is my sister.
Oh, so Boston is your sister, and she found a husband named Logan.
Yes. And we call them Airport.
I mean, when I was watching your Instagram, by the way, she's got great Instagram. You guys follow her. But I was chuckling. I'm like, how did that happen? Well, at first I thought they were brother and sister. I said, oh, so their parents, got lucky, in the air, and they wanted to give reference to Boston and Logan. But yes, it was. So when they met, was that so funny? Like, was it so?
It was very funny. And my mom, to this day, whenever she mails them a letter, it is literally addressed Airport and then their address. We have actually a couple of entities under Airport.
Oh yeah, love it. Okay, so how great. So now you bring them in. They bring some money in to buy in, right? And are you guys just 33, or how does that work?
I'm 50% and then they're 50%.
Great.
Yes.
Good. I love that. Good job, Brea.
Yes.
Are they older or younger than you?
Logan is a few years older, and then Boston is 3 years younger.
Got it. Okay. Yeah. And so now, you did this right around COVID. So now it's 5 years later, and you guys have gone from 20 to 160.
Yes.
So how did that happen? And you're in 5 states.
We are in 5 states. Yes. Some we're growing in, and some, I have a single family house in Charlotte, right? So I'm there, but not growing. So how did that happen? Relationships. Hands down, the most important thing, in my opinion, when it comes to real estate is relationships. And what happened is the portfolio that we had in Allentown, we kept kind of burning through property management, and found a really good property manager. And I developed this relationship with him. We would actually have like really lengthy phone calls every week, just about everything from health to real estate to just the most random things. And what he wanted to do was to set up his own property management company. So he was working for a company. The values really didn't align for me or for him, but he was like, hey, come look at this other market. We're actually going to take like a few of the employees, and we're going to start our own property management company in this other market in Pennsylvania. And this was right before COVID. And I tell you, I wish I would have bought 100 properties at that time, because I'd be sitting on a beach with a margarita right now. That market exploded because of COVID. Wow. You could buy single family houses there for $40K at the end of 2019. And now they're selling for 200, 220.
Wow.
Renovated. So he and I really talked about him wanting to do property management for a handful of investors. He wanted to have the deal pipeline. So make those relationships with wholesalers, put together the construction team. He didn't want to work with 500 investors that all had one property. He'd rather work with 10 or 20 that all had 100, 200 units. And so I said, you know what? I'm going to be with you as you make all of these mistakes, as you start this new business. But let's do this. And early 2020, right before COVID, we closed on our first property in that area of Pennsylvania. So since then, we we usually close on anywhere between like two to 5 deals, depending on the size of them, a year there.
And
Yeah.
his job is he finds you the deals and he manages it, but he's not a partner, or he is also a partner?
He is not a partner. Nope.
Okay.
Nope. He has his own goals when it comes to equity and partnership.
Awesome.
But yes,
But he finds you the deals.
He does.
That's
Yep.
great.
Yes.
That's great. And then you've mentioned now, so I want to talk about hard money lending, and also you're raising capital. When you say we are now raising capital, do you mean that you are syndicating deals?
So we have one syndication, and we did raise capital for that. But the primary way that we raise capital is through private lending. And so we structure actually private lending a little bit different, where people will private lend to us. We will actually collateralize in a second or third position on our already stabilized properties that have a ton of equity in there, because most of our private lenders want to be involved in real estate, but actually don't want the risk of like, oh, we default on their loan and now they have to renovate something. So it's stuff that's already renovated. There's plenty of equity. It cash flows. There's tenants. So worst case scenario, you're taking over. If we don't pay you back, which we haven't done, you're taking over a property that is already stabilized. And so we work with our private lenders in that capacity. And then we take those funds and we actually will stack them with hard money and really exponentially grow. And so that's been another part of how we were able to grow to 160 units, is because we had the private funds, we layered that with hard money, and then we just buy, renovate, rent it out, and refinance over and over and over again.
Because you had 20 units in COVID, and then it's been 5 years, and you say that you're buying 5 a year. So if you buy 5 a year, that's only 25 plus 20 is 45.
In that market, in the Pennsylvania market.
Oh,
yes.
Gotcha.
Yep.
Now, is the guy that's finding you deals going in all of these other markets, or
No.
you have another guy in those markets?
We have other systems in those markets. So it's a little bit of a different system where we'll work with wholesalers and I'll do most of the underwriting. And then we it's a little bit more hands-on in our other markets.
Got it.
Yep.
Amazing. One question. Lynn Does Investing asks, how are you funding the deals? But you just explained that. So what is the average interest rate that hard money lenders charge for these assets in these markets on average?
Yeah, we have built up some very good relationships with our hard money lenders. So we are actually between 8.5% to 10%. And
Great.
We pay our private lenders 10%. So I tell all of our private lenders, I'm going to track with you with what we pay our hard money lenders. So I give them the upper interest rate. But we do have some deals that we will get an 8.5% quote from our lenders on.
Amazing.
Yep.
Okay. So before we got on the call, you said, oh, guess what? We're also doing something else, which because I'm in retail, I'm very interested. So go ahead and share what else you three are doing.
Sure. Yes. So as you all think about getting into real estate, or for those of you who are, there may come this point in time where you're thinking, okay, I need other streams of income. Real estate has gotten me here. How do I go here? And along the way, you might learn about buying businesses. So that was something that has been on our radar the past couple of years. And what we decided to do was actually buy into a franchise. And we decided to do that last year. The franchise is called Alloy. It's a small group personal training gym. So very small space that's needed, 1,500 to 2,000 square feet. We are not looking for a Planet Fitness gym space. So that means we have a lot more commercial real estate available to us for locations. And Logan's bread and butter is strength and conditioning. So he has, 15, 20 years of experience now at this point doing exactly that. He actually used to train the special forces here. So we have found our first location and we are currently in lease negotiations. Our goal is to set up 10, 12, 15 within a region and really optimize, and then look to sell them off to private equity or someone who has enough cash to buy a region. So again, go big. Because
I mean, so smart. Were you in all of the advanced classes in high school?
I'm a nerd. I'm a nerd.
I mean, so smart. I mean, so smart. For your age, I'm, just bravo. And like I said, call me if you run into a snag on your lease. I've done a few thousand of them.
I will be reaching out to you. Yes.
I'll give you the reason why the landlord's asking for it, and then we can figure out if there's any, wiggle room. But yes, so we're both in a group called GoBundance. And what's so great about GoBundance is all of the calls we have, right, on, you named the topic. But 2 weeks ago, one of the founders, Mandy, did a call on, do you buy real estate, or do you buy a business, or do you do both? And it was a fascinating call, which really got me thinking about real estate and businesses. And it was fascinating. So yeah. I really am enjoying GoBundance, and you've been in it. I've only been in it since March. You've been in it since for 4 years, right?
I think going into year 4. Yeah.
And how has being part of GoBundance helped with the scaling of the real estate?
Yeah, I love that question because your network matters so much. When I first started investing in real estate, I had a great group of friends. We would meet up every Tuesday. We called it Hot Tub Tuesday. And I would come and I would talk about real estate. And none of my other friends were really into real estate. And I'm sure they are too kind, but I'm sure they would just roll their eyes, or, it's like this again. They're my ride or die girls. They are not my real estate network. And so for a long time, I was alone. I mean, I have a PhD in public health. I was a professor. This is not anything that I was trained for. Both of my parents were teachers. I did not come from entrepreneurship. And so it was just like, okay, I'm on this island. I'm doing this. I know from podcasts and books, like other people are doing this. So I guess I'll go to meetups. But a lot of times, like, especially in the Bay Area, is a bunch of dudes, bunch of engineers that are trying to tell me how to invest. And I'm like, how many properties do you have? None, because of the numbers, and they're not optimized. And I'm like, okay, well, I have like 20. So
exactly. Shut up.
So it's just, I totally lost my track, my brain. But
GoBundance. So you found found a tribe.
Yes, I found my tribe. And as I was saying to Beth earlier, it's great to be surrounded by women who have knowledge, who are intense, who have passion, who are supportive. All these traits that when you go into other networks, they're just like, oh God, like, you're too intense. You're too passionate about this.
Yeah, they challenge us to think even bigger. Like you cannot come to a meeting and I was telling a friend of mine last week, I had lunch with them in North Carolina, and I said, I am the smallest thinker in this group. And he goes, you? I go, I'm telling you, I am the smallest thinker. I go to these meetings and they're like, you're not thinking big enough. I'm like, I'm 64. I'm getting ready to retire. Not really, but to be in a group, they say that, that if you're the smartest person in the room, you're in the wrong room.
Exactly.
Well, and I can say, if I'm the biggest thinker in the room, then we're in the wrong room.
Yep. Exactly. So for me, it's been so important just to have that around me, to just normalize that everything I want from life and everything that I'm doing is okay. Not to mention, like, the resources that come from everyone within the group. I mean, I could list off so many examples where I've had problems and I could run it by someone, or I needed like a wholesaler in a particular market, or we needed help with our insurance, just anything. Right. You're tapping into that. And it has been so important. And then along with just raising capital, I mean, there's a handful of women that in GoBundance are private lenders with us because it fits their investing buy box, or part of their investing pie, as I like to talk about.
Right.
So
I just was on the call with the film. I just invested in the film.
Yeah, I invested with that too. It's great.
How great, right? And so, and your brother-in-law is in the Guy
Yes.
Go Dudes, Go Bros,
Go
right?
Bros.
Right, right. Was he in it before you or after you?
So he was in it before, because when Boston and I looked at it, there was a time that GoBundance Women wasn't taking any applications. They were going through some transitionary periods. So once they opened it up, I joined, and then Boston joined a couple months later. So, and I think by that point, Logan had been on the men's side for like 6 months to a year. So,
Yeah,
yep. So we have a network there too, which is great.
Yeah. Well, those 728 calls.
Oh, yes.
Yeah.
Yes. Goals.
Oh my gosh. So, okay. So going back to real estate. So I love the business idea. Like I said, I'm thinking about some things, and in my business in retail, it's super hard to buy shopping centers right now, and it's super hard for the developers, the development teams that would go build 10 Starbucks or 10 Dutch Brothers coffee. It's super hard right now to go build those. Construction costs, interest rates,
Yes.
cap rates. It's almost impossible. And I see my industry starting to, they're going and becoming franchisees of urgent cares or burger restaurants, and then they're building for their units, and then they're going to roll up and flip them, or they're going to sell the real estate to investors. It's fascinating what's going on in our world with the colliding or the collision of, or the meeting up of real estate and operating businesses.
Mm-hmm.
It's
Mm-hmm.
fascinating. But,
it is.
Okay. So, last question.
Okay.
One piece of advice. So we've got about 150 people on our call live. So thank you all for not eating dinner and being on this call live with us and listening to Brea. She's fascinating and young. You got 30 more years to catch up with me. Think about what you're going to do. I'm so happy. But I would say 90% of the people that watch are on the sidelines, not because they don't want to step in, they don't know how, or they're not sure. And so I always ask all of my guests if you could give a couple pieces of advice to those folks. They have money, but they're just not sure. What would be your pieces of advice to them?
Yep. If you want to become an active real estate investor, and so what I mean by that is like doing what I do, right? You're acquiring, you're managing property managers, contractors, all of the things. And there's some pros and cons to that. Set a timeline for yourself, because analysis paralysis can be forever. We are our worst enemies, and we can create any excuse as to why we should not do something. And so when I talked about that second deal that I bought, I gave myself 6 months. Intake all of the information, go to all of the meetups. But then I gave myself a deadline where it was like, I know what I know, and I'm just going to do it. And then pick a deal where if it just goes crazy wrong in all of the ways, it's not the end of the world, right? Get your master's degree, as Beth says. Don't do $1 million deal your first time. Find a market where it's like, all right, if I have to leave a bit of money in, or if I have to have a year of holding costs where I don't have rents coming in, it's okay. And during that time, you're going to be building relationships. You're going to be learning what you're good at. You're going to be learning what you need to delegate. But really give yourself that, like, all right, 6 months, this is my deadline. I am going to do this. If you want to invest passively, then start to find people that you can trust that have a track record. It's like the people who private lend with us. They want to be in real estate in some way, but they don't want to be in the day-to-day. Find those people and talk about, hey, I have 50K here. You've been doing flips for the past 10 years. Do you think you could put this money to work? Or, do you just want a private lend or look at some syndications, but really build the relationships, because there's a lot of bad actors out there, unfortunately. And that's all coming to light since COVID, because deals were way too easy. But that's the other thing, is really start to build those relationships. If you want someone else to put your money to work, find someone who you can trust. But those would be my two pieces of advice.
Yeah. And that's what I'd say. I say to women and men, but women, we love men, but I'm just trying to help more women. Right, just trying to help women. But I say, start talking, start telling people that you want to invest, and then do your due diligence to find the right GP to invest with or sponsor. Right. And then I also say, like what you said is, and I lost my train of thought.
The analysis paralysis, active investing.
No, I can't remember. Look how dark I am again. I definitely need that ring light. Sorry, everyone. It was, we can all lose our money. Like, this is not guaranteed, but so what Brea said, don't invest $1 million, invest a couple $100,000, find a deal. And can't we just make that money back? Like the amount of hand wringing that goes on. If I invest $50,000 in some GP's deal for, let's say it's a $1 million apartment, 10-unit apartment complex, and someone's going to give 50,000 as an LP. And you could lose all of that money, but if you can't make that back, then you shouldn't invest it, right? We have to have some confidence in our own ability that, oh my gosh, if I lost it, could I make it back? How long would it take me to make that back, right? So I said that a couple of years ago at a conference, and I can't tell you how many women came up to me and said, yes, I could make that back. And people then took more action. Like, think about what's the worst that could happen. I could lose the money, but could I work my W-2 and make that back? Yes, you can. But in getting started, how important is it to get started? So important. Exactly.
And imagine the self-reliance and how empowering that is to say, oh yeah, 50K, that's nothing. I am so confident in my ability and my skills that I can make that back. And I think the other piece to this that people are so scared of is they view money as the outcome. Money is the tool. You can move that tool however you want. Your outcome is time freedom, leaving your W-2, getting a private jet, whatever it is in your mind, that's the outcome. Money's the tool. There is more than enough money. You can make money. You can find money. It's not the outcome. But when you view it as the outcome, now it's scarce. Now it's, oh, I don't have this. I can't start because I'm going to lose this 50K. No, amazing. You can do it, and then figure out what your outcome is.
Awesome. Let's end on that. Awesome. Okay. Love it. I mean, 39, 38. How 39, old are you now?
Yeah.
I can't wait to watch the next I don't know if for me 30 years, but I can't wait to watch. And I'm glad that we're part of GoBundance together. And I look forward to getting to know you even better.
I love it. Thank you.
Thanks, Brea. Thanks for being here. Thanks for being on Women Investor Wednesdays.
Thank you. Nice to chat with everyone.